Welcome to our deep dive into New Holdings' third quarter 2025 results. New trading under ticker NU on the New York Stock Exchange has just reported another strong quarter. In the next 12 minutes, we'll break down the numbers, analyze the growth trajectory, and look at what's driving this Latin American fintech giant forward. Let's get started. NU's customer base continues to expand at an impressive rate. As of September 30th, 2025, the company served 127 million customers across Brazil, Mexico, and Colombia. That's an addition of 4.3 million customers in just one quarter and a 16% year-over-year increase. What's particularly noteworthy is the activity rate, which remained above 83%. This means over 105.9 million customers are actively using NU's products. In Brazil specifically, NU now serves 110 million customers, reaching over 60% of the adult population with an activity rate above 85%. Beyond Brazil, NU's international expansion is gaining serious traction. In Mexico, the customer base surpassed 13 million, now reaching 14% of the adult population. Colombia is approaching 4 million customers. Both markets are demonstrating that NU's digital banking model is scalable across different Latin American economies. The company's ability to replicate its Brazilian success in new markets is a key indicator of its long-term growth potential. Let's talk numbers. NU reported revenues of $4.2 billion in Q3 2025, a 39% increase year-over-year on a foreign exchange neutral basis. Monthly average revenue per active customer, or RPAC, surpassed $13, up from $11.2 in the same quarter last year. This growth reflects not just customer acquisition, but deepening engagement as customers use more products and services. Interest income from credit cards totaled $1.2 billion, while loan interest income reached $1.3 billion. NU delivered net income of $782.7 million in the quarter, representing a 39% increase year-over-year on a foreign exchange neutral basis. Return on equity reached a record 31%, highlighting the efficiency and scalability of the business model. The efficiency ratio slightly decreased to 27.7%, demonstrating continued progress in productivity and operating leverage. This means NU is generating more revenue relative to its operating expenses, a sign of operational maturity. NU's credit portfolio reached $30.4 billion in Q3, up 42% year-over-year on a foreign exchange neutral basis, and 9% quarter-over-quarter. The total interest earning portfolio expanded 54% year-over-year to $17.7 billion. Credit card balances showed acceleration during the quarter, while secured lending grew 133% and unsecured lending increased 63%. This diversification across products strengthens the overall portfolio and reduces concentration risk. Asset quality remains a critical metric for any lending institution. NU's 15 to 90-day NPL ratio for the Brazil consumer credit portfolio stood at 4.2% this quarter, slightly below historical third quarter seasonality. The 90-plus NPL ratio increased marginally to 6.8%, in line with expected seasonality and underlying portfolio dynamics. The overall credit loss allowance as a percentage of the credit portfolio was 3%, down from 4% in the prior year quarter. On the funding side, deposits increased 34% year-over-year on a foreign exchange neutral basis to $38.8 billion. The cost of funding remained at 89% of blended interbank rates for the quarter. The loan-to-deposit ratio reached 46%, indicating NU still has significant capacity to grow its lending business using existing deposits. This efficient funding structure provides a competitive advantage in the market. NU continues to demonstrate impressive operating leverage. Monthly average cost to serve per active customer remained at $0.9, unchanged from the prior year despite significant growth in scale. Total operating expenses were $697 million compared to $624 million in Q3 2024. As a percentage of revenue, however, operating expenses declined, showing the benefits of NU's technology-driven, scalable platform. NU's balance sheet shows significant strengthening. Total assets reached $68.4 billion as of September 30th, up from $49.9 billion at year-end 2024. Cash and cash equivalents stood at $12.9 billion. Total equity attributable to shareholders reached $10.6 billion, compared to $7.6 billion at the end of 2024. This capital position provides NU with flexibility to continue investing in growth while maintaining regulatory capital requirements. Breaking down the credit card portfolio, current receivables totaled $8.1 billion, while installment receivables reached $10.8 billion. Revolving credit stood at $1.1 billion. The credit card ECL allowance was $3.3 billion, representing a coverage ratio of 16.5%. 88.2% of the portfolio was not yet overdue, with the Stage 1 portfolio accounting for 80% of total exposure. The loan portfolio showed strong diversification. Loans to individuals totaled $9.7 billion, including $2.7 billion in secured loans. Loans to companies reached $638 million. 95.8% of the portfolio was not overdue. The loan ECL allowance stood at $1.4 billion, representing a coverage ratio of 13.3%. The Stage 1 portfolio accounted for 79.2% of total loan exposures. NU is building what it calls the next generation of its platform, focused on becoming AI first. The vision is to integrate foundation models deeply into operations to create an AI-native interface to banking. This strategic direction aims to create meaningful benefits for both customers and the business. In Mexico, NU received regulatory approval to begin the process of converting into a bank, which will allow the company to expand its portfolio of credit and other financial products in that market. NU maintains a comprehensive risk management framework covering credit, liquidity, market, operational, and regulatory risks. The company uses value-at-risk modeling with a 99% confidence level. For the Brazil Prudential conglomerate, the CET1 ratio stood at 11.9%, Tier 1 at 13%, and the capital adequacy ratio at 14.6%, all above regulatory minimums. In Mexico, the capital ratio was 18.8%. In Colombia, it reached 20.92%. To summarize, NU Holdings delivered another strong quarter with broad-based growth across customers, revenues, and profitability. The company added over 4 million customers, generated record revenues of $4.2 billion, and achieved a 31% return on equity. The credit portfolio expanded 42% year over year while maintaining disciplined underwriting. International operations in Mexico and Colombia are scaling successfully. The efficiency ratio improved and the balance sheet strengthened, with equity reaching $10.6 billion. That concludes our analysis of NU Holdings Q3 2025 results. If you found this breakdown valuable, please like and subscribe for more financial analysis. Remember, this material is for educational purposes only and does not constitute investment advice. All investment decisions should be made based on your own research and risk tolerance. Thank you for watching, and I'll see you in the next video.